Yeah.
That's scary. Don't go in there. Don't go in there. Oh, it's pretty good. Wow, did it. It's pretty crazy.
No.
That's an easy one, Tesla. Oh, where are you going? I'm right here. Just had to. Guess that's it.
No. No.
Now that Elon Musk is going to buy it, now that, it's going to be open to free speech, I'm more interested in being on it.
Landon Swallen, the co-founder of LikeFolio.com, for a little discussion on the electric vehicle space. So Landon, let's start right there. We'll start, kind of wide here, just a broad kind of demand assessment that you see it, because we read all about electric vehicles. Seemingly Tesla's making news headlines every day. Obviously, there's legislation that's been passed that's supposed to be driving spending towards this type of infrastructure of alternative energy. But are consumers interested in these products?
They absolutely are. I mean, if you look at the chart of electric vehicle demand, it's shocking. I mean, if you would have looked at it a year ago, it was a huge, almost like a hockey stick curve. But when you zoom out, that move looks insignificant compared to what's happening now. Gas prices are absolutely driving this. It's incredible how much the up and to the right is on this. I mean, this is just like a beautiful chart for electric vehicle demand, and 200% year over year. So it's basically tripled over the last year. And it was, like I said, it was high a year ago, and we're triple what it was a year ago.
A story of politics and capitalism in our billionaire era. The thing about billionaires is they get a lot of adulation. They clearly have excess wealth, but often they don't get enough scrutiny, even as they publicly wield powers that can outstrip entire countries. So it matters if the world's richest person, yes, the person with more money than anyone else on earth, Elon Musk, manages to buy and control one of the world's most influential platforms, Twitter. The United States tries to regulate how much of the media one company can own. We're talking about owning all of a multi-billion-dollar global platform, a whole different level of power. And that may appeal to Musk, who can then advance his business and government interests if he ultimately buys Twitter and owns it outright. He will have a legal duty to his investors under law to pursue profits. But that's where this gets really interesting, and that's where it's embarrassing some people over on the right, as I mentioned earlier in the show, and I'm going to show you right now. Musk's pursuit of Twitter, the way he's done it, has actually been very revealing. People cheered Musk on by just accepting his claims that his true, deeper goal is to save Twitter, make it better, make it more friendly to what he calls free speech. And they accepted the idea that it's not about Elon Musk or his money, that he just wants to save free speech, despite lack of much of a record in that area in his career. American conservatives also accepted Musk's promise that he would basically help them on Twitter and put Trump back on the platform and do other things that they want. Now, Musk was breaking a commitment, a pattern that Republican fans might want to monitor. Twitter sued him over the broken commitment, which teed up this potential trial and new evidence and secret texts coming out. And then this new surprise.
Elon Musk's purchase of Twitter appears to be back on track tonight. Musk moving to avoid a lawsuit from the company.
Musk and Twitter are working to close a $44 billion purchase of the social media network after Musk tried walking away from the original acquisition agreement earlier this year.
President Trump could be back on Twitter before the midterms now that billionaire Elon Musk is once again in line to buy the social media platform.
Some of his investors may also be backing out. Now, this is all out in the open. Musk has been all over the place. He's broken his word. He's used people and alliances when useful and then bailed. And some of his Republican fans seem to figure this out sort of slowly, not in real time, but after the fact, over time, and figure it out in public. They veered from basically repeating everything Musk said about his supposed reasons for helping Twitter, the free speech talking points, to then noticing his pattern.
For once, this isn't about power and money. Musk is doing it to save free speech.
But he's all over the place.
He's all over the
things.
place.
I think some people are getting a little annoyed with him for these constant tweets which throw everybody into confusion.
The 5 people at this table all are fans of Elon Musk. I don't think that I overstate
all of us are.
that.
I am.
I'm not giving Elon advice, but if I was, I wouldn't be talking about people's jobs and people's livelihoods via Twitter.
He's our Edison. This is our Thomas Edison. This is our Da Vinci of our generation.
Announcement that nearly 10% of the company's workforce would be laid off over a super bad feeling about the economy. Liz, what the heck is going on?
Easy with the Da Vinci talk over there on the 5. You see the mood shifting as Musk bailed.
I think it's great news for the country.
We need to actually have real people that can say whatever they want because we are a country of free speech.
But if Twitter is truly the country's town square, then Elon buying Twitter is saving the country.
Now that Elon Musk is going to buy it, now that, it's going to be open to free speech, I'm more interested in being on it.
It's almost like they've forgotten the adage of their former Republican president, who memorably captured where the shame belongs if you let someone repeatedly, over and over, continue to fool you.
There's an old saying in Tennessee, I know it's in Texas, probably in Tennessee, that says, fool me once, shame on you. If fool me, we can't get fooled again.
That Bushism was memorably sampled by J. Cole in No Role Models, where he rapped, fool me one time, shame on you, fool me twice, can't put the blame on you. Fool me 3 times, forget the peace signs. And that same song also has some lines that apply to these credulous Republican Musk fans. Don't save them. They don't want to be saved. Don't save them. They don't want to be saved. They don't. It's become clear these pundits have no desire or want to wise up. So maybe they're in on the farce, or maybe they don't care about the real world results, just like Musk. His case has put some real world pressure on the billionaire over money and his reputation. Twitter pressing for even more of his text messages. The ones that already came out show Musk laughing it up with Joe Rogan about taking over Twitter, or Musk conceding he hates managing things. We may have some of these texts even. We may be able to put some of them on the screen because the texts show basically Elon Musk talking to people as they hail him and they call about, oh, it's going to be a happy mob, you're going to fight wokeism. But let me tell you what you won't find in these texts or in Musk's public leadership over these months. You won't find a rigorous effort to tackle or improve free speech policy online, something he could try to do. It's a complex area that doesn't seem to actually interest him when it comes down to the work. So, when you put aside the texts and all the people praising him, there's other accounts that note the trial and even more information coming out could shatter the myth of the tech genius that Musk cultivates. That's how one writer put it. Now, there's no doubt Musk is good at several things. innovation, business, driving and shaping debates rather than responding to them. Any one of his business projects could really define any other person's entire career as a success. From the disruption of electric vehicles to private space travel. So I want to be clear, it's still certainly possible that Mr. Musk could bear down, buy Twitter, and improve it. In one sense, you could say this platform for sharing text, for sharing sentences, would seem less complicated than the literal rocket science that Musk taps for his other work. And I say that in all seriousness and fairness. But in another sense, running Twitter in a responsible, serious way while also balancing profits can actually be as hard as rocket science. It's like overseeing the United Nations and dueling presidential campaigns in every country on earth at the same time and running an international media company of sorts, all at once. There's a reason why these platforms are continuously under fire for undercutting democracy. Mr. Musk, who has the type of money and power that can affect all of our lives, is about power and money first. Keep that in mind as his increasingly exposed pundit fans, who've now been through this back and forth twice, keep it in mind as they keep insisting the opposite.
For once, this isn't about power and money. Musk is doing it to save free speech.
Again, to paraphrase J. Cole, one time for the DC brothers, one time for the DC pundits. Listen up. You're getting played by a billionaire. And as President Bush reminded this great nation, if you are getting played a second time, you're just playing yourself.
Well, from one mechanism of riding and ride sharing to another one in owning a vehicle, perhaps. We're also watching shares of Tesla this morning after Morgan Stanley's Adam Jonas cut his price target on Tesla from $383 to $350, warning of continued headwinds into the fourth quarter and 2023. One of the notables here, the fiscal year 2023 delivery forecast cut to 1.8 million versus the 2 million previously out there, saying that they believe the buy-side consensus range for fiscal year 2023 in deliveries is in the 1.7 million to actually 1.9 million range there.
Does Adam Jonas actually exist? You know, we get his notes, but I've actually never seen his face. I've been sending him emails for over 10 years, doesn't really get back to me at all. But look, his notes are really good. He's a market mover on auto stocks. I appreciate his work, appreciate his diligence on Tesla. Would just love to see his face.
Think he's a Satoshi?
Maybe.
Just a few more things from the note, if I may. So he says the company is going through peak auto margins right now, which is interesting. He talks about margin headwinds from ramping up 2 gigafactories on 2 different continents as something that could be a negative for the company. He also says that the company could be experiencing demand destruction, which is really interesting here. And also flies a little bit against what I feel like is the conventional wisdom around Tesla, which is that demand is inexhaustible, right? But that it's supply stuff that has maybe held constrained profits. So it's interesting that he's saying there is a little bit of demand destruction going on there.
And while they're also trying to ramp up the capacity and production. And so even if you've got the ability to ramp up all of the output at Shanghai Gigafactory, at Austin and Berlin, sure, that's more capacity that's coming online, but at what cost if the consumers are either opting for a different brand that's coming into market, or if they're just saying, we don't like the price that Tesla's put out there on the street.
We're following tech stocks. Another rough day here for the NASDAQ after that big downturn we saw at the end of last week. Tesla was one of the names hit hard in the sell-off, turning in its worst week since March 2020. But the company is making inroads, we learned today, in China, just setting a record for monthly deliveries for September. Joining us now is Bernstein's Tony Saganagi. Tony, your market perform, I know you're not particularly excited about Tesla. Is it the fundamentals, or do you think it's the broader market backdrop?
Sarah, we've been a little bit more cautious on Tesla for a couple reasons. One is we still think its valuation is very high, particularly relative to other automotive stocks. And secondly, we do worry fundamentally that it may be difficult for Tesla to continue to sustain this 50% growth rate that it's promised going forward. And I think, quite frankly, despite the good data from China today, China is probably the one area of the world that we, and I think more broadly investors, are increasingly worried about.
I should correct myself. Your underperform rating on Tesla, $150 price target. So why do you think China's a worry if we got those good delivery numbers today?
What happened, Sarah, over the last several months is the best leading indicator of Tesla's demand in a given region is how long you have to wait to get a car. And in China, that was 14 to 22 weeks, 3 to 6 months ago. It's now 1 to 4 weeks. And so Tesla had a very large backlog in China. It has a very limited backlog in China right now. And we've seen that happen also in the U.S. We think there are more plausible explanations for why that's happening in the U.S. But in China, it does feel as though we are potentially starting to see some incremental softness in demand. And that's, for a growth stock like Tesla, it's all about growth and top line growth. And so I do think this is an issue that we all need to pay attention to going forward.
Yeah, you think it's going down to 150. You think Apple is a market performing 170, which is interesting because Apple has held up relatively well against the market. Even when it gets hit pretty hard, it's still it hasn't been making new lows. Why?
Apple has really been viewed as sort of this stable consumer franchise. They did very well during the pandemic. They've done quite well this year. And so folks view Apple as this great consumer franchise and brand that is relatively steady. I think, the big question is, like many other companies, is Apple impervious to potentially weakening consumer spend going forward and shifting spend? So one is consumers will be increasingly, their purse strings will be tightened because of higher rates. But the second is this potential concern that we're seeing in the PC world where, folks were spending a lot on electronics during the pandemic. Now that the world's opened up, they've shifted those dollar spend away from electronics and home furnishings to other things like experiences, travel, entertainment, et cetera. And so that's really the $1 trillion question for Apple, particularly over the next 8 weeks or so, when we get more data points on the true strength of the iPhone cycle, is can Apple continue to plow through despite the fact that it did very well during COVID and despite the fact that we have an incrementally weakening consumer?
Yeah, and the latest IDC data was actually quite positive for Apple, showing that while global PC shipments fell across the board, Lenovo, HP, Dell, Apple was the exception, and they actually rose 44%. You cover a lot of these companies, Tony. So I saw you put out a new note on IBM today. You're also pretty cautious there. Are there any companies within your sector that you cover that you like right now and that you would say represent a really good buying opportunity?
Address just the Apple and the IDC question, Sarah, because IDC collects data largely submitted by PC OEMs. Apple does not participate in submitting or sharing its data with services like IDC or Gartner. And so historically, IDC and Gartner's track record for predicting Apple on a quarterly basis has not been great. So certainly the numbers look very good. I would just be a little cautious about extrapolating that. To your question about broader tech, look, we think tech is fairly to slightly overvalued. So we're not particularly bullish on tech. We are a little bit worried that we may have earnings estimates go down. There may be a little more downside to the market. And as a result, we prefer really inexpensive, more defensive technology names. So companies that I follow, like Dell and Hewlett-Packard Enterprise, that are trading at literally 5 to 7 times earnings, we think have relatively less downside in the near to medium term. And so that defensive posturing leads us to those names.
Got it. Tony, thank you. It's good to check in with you. Tony Sacconaghi. Appreciate it, from Bernstein.